Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. This week we had a pretty we had some movement this week. As you can see, I got a s- chart up of the SPX, and you'll see now I do this every week. I chart out the weekly expected move on here with support and then resistance, and you can see as the week opened up right here on, let's see, Monday the 25th, we can see the market. We actually had a green day. Then the market jumped down. And then on Wednesday, you can see we got a hammer candle. That's probably my favorite candlestick. It's this hammer right here. It came down, touched the expected move for the week. Look right on it. Push back up. Now we're right back into this 9-day moving average. Now, if I pull up the NASDAQ, you will see that the NASDAQ actually has crossed over the 9-day. And that's like a short term that shows me the direction of the market short term. And so when it did that, I actually put a trade on today, right? Then the market turned on me, but that's okay. I put on, let's see if we can find it over here. I sold a put spread to get long. Um, and I did it. I went out. Let's go look at. I'm gonna come back to that. Let's go to the table. I went out 35 days, and you can see here I am right here. So I've started back trading in the TastyTrade platform, and as I told you guys I would. I made a few trades this week. This was one of them that I put on today, and we're gonna see if we can get some movement in in the Nasdaq. The Nasdaq is the only one of the indices that ended in the green today. The Russell actually turned down. So if we let's go look at the IWM. The IWM turned down a little bit today, but it did also went up, crossed over my 9-day moving average, and we actually have some divergence on the MACD. Now, not on the moving averages, but if you look down here at the bottom on the histogram, we do have divergence on the histogram. So a lot of times when you get that divergence, whether it be on the histogram or I'd rather see it down here on the moving averages, but I take it down here on the histogram. So a lot of times when you get that divergence like that right there, it'll continue until it at least goes green. The histogram goes green. So we'll see where it goes if it gets to that, right? Let's see if sometime next week this dibble dabbles, a little bit up there. Now you may say, why? We're gonna go back to the QQQ. You may say, well, why sell a put spread instead of like buying calls or buying call spreads? It is because I would rather, and you got a slight divergence here too. I would rather sell the put spread because it may take time to do it. It may take time. First of all, I'm going against the short-term trend. It may take time for it to do its movement, and it could chop around. When you buy options, you're on the clock. As I always say, you need the market to move in your direction quickly because you're buying a decaying, like that derivative, that option is decaying, and you're paying for it when you buy the option. When you sell the option and it decays, that's in your favor. So I would rather be a seller in that particular instance. And keep in mind, I sell options the majority of the time. I sell more than I do buy. I think that that's one of my traits. I'd rather sell an option than to buy it. It's just me. Um, I got some other comments about people who are who out here telling you to buy options. You got to be careful with that. So we talked about the SPX and the expected move. I don't have the expected move charted out for next week yet. I will do that this weekend and get that video out. But I can glance at it and just tell you guys right now. So what next Friday would be what, the 6th? So we had a $71 move factored in this week. It was like 71.04 or something like that. We got another 71.46. So similar, right? So we'll see how that plays out. But one of the things I wanted to talk about in this video today, more so than just, I wanted to go over some specifics in the market. We talk about, I did a video recently on the Ackman trade, right? And how he is short bonds and long yields, or you basically he's either long the yield or short the bond, which is basically the same trade. I think he's short the 30-year bond, betting on treasury yields going higher. And I'll show you when I did the video, it was somewhere like right in here around the beginning of August, right? It had gapped up. It was right into this range. And now you can see where it's at. So he's making good money on the trade. But one of the things he's able to do is because of his reputation, when he talks about a trade, he actually can get, help from the market. Because when Bill Ackman makes a trade, the rest of the market kind of follows suit. Like me talking about me getting bullish in the Nasdaq, showing you my trade in the triple Qs, the rest of the market isn't gonna pile into it to push it up. So that's one of the things. That's an advantage that you have to being able to talk your book. And I'm not saying it's good or bad. It's just that allow everyone to do it. I remember that when you had the GameStop thing going on in AMC and the meme stock rally, the Reddit groups and the people that were running the groups got into a lot of trouble. And also with Bitcoin, they call people like that. They say that they running pump and dumps, and they call them scammers and things of that nature, right? Because they're able to talk about or promote whatever they own, and then if they sell it, we have no idea when Bill Ackman is going to sell and get when he's going to um, close the trade. We don't know that. We don't know when he's going to take some off. We have no idea. So, and I guarantee you, no one's going to say anything about it whenever he does take profit, right? So I would just say, and I don't even think the average retail trader even knows how to do anything with this trade. I come on here and show you guys how you can trade. Basically, if you want to follow him into this trade, you could short the 30-year bond, which I do not advise unless you need at least, I would say, $100,000 account at least. At least, you really playing in the bond market. I would say you want $1 million account, because of how large it is. Now, if you trade the TLT, you can short the TLT, but it just doesn't. You're not gonna get the same bang for your buck trading the TLT. Now, and with TastyTrade, you can trade the treasury yields as a retail trader. So I'm going to show you guys how you can do that. You would just I'm gonna click on trade. I'm in the trade tab. I'm gonna go to active. And so right here is where I have futures. Now you could put any watch list over here you want. I have the futures micros over here. And here you see the yields, the 10-year, the 2-year, and the 30-year. They even got the 5-year. So if you wanted to trade the long end of the curve, which would be the 30-year, you could come right here and you could click on the buy. If you trading with Ackman and you think 30-year is gonna go higher, here you go. You click on the buy, and it actually only margins your account $320, which ain't bad, right? So you can trade this small and then try to make profit off of it. To be honest with you, this video is the first time I actually like looked at it and thought about it. But to be honest with you, if it's me, I'd short right here. I would short this. There's no way. And that's just because I'm looking at the chart. And I do see like short term, I believe that this will come down a little bit. and I think that it's some money to be made shorting this. If you got the rocks to do it, right? Because you this can the way this is moving and the way the things that are going on and with the Fed, this could turn more parabolic than it already is. And you see the RSI right here is red, so it is overbought. So we just keep that in mind. Earlier, I want to also talk about Costco. I think I made a post on Facebook and I put it on Twitter. I don't think I So that's one thing. Follow me on all the platforms because sometimes I send out like charts and stuff. Now in this Costco position, I scalped Costco. Let's see if I can find the trade. And it was really I was in it for like 5 minutes. The market was moving. It was moving fast. I jumped in. Um, you see a little $85 scalp. Think that was on Thursday. It may have been yesterday. What, the 28th? Yes. So that was yesterday. So I jumped in and I'm gonna show you what I was looking at when I made that trade. Let's come over here. Oh, we can do it right here. Pull up the 30-minute intraday. I don't really do a whole lot of day trading. The market, let's see, the market opened up right here. Boom. And I got in. I think I got in somewhere like when it pulled back. So you got your pull back into here, and then right here, it took off again, and I was out. I mean, literally just like that. I was in here somewhere right around in here. So I was not in long at all, and I was only in the trade for 5 minutes. I seen it moving. I bought a call. Market jumped up. I said, you know what? Let me take this little money and get out. And then I got out of the trade. Now, I did watch it. I watched it today to see what would happen, and it kind of just pulled back, and then here we go. So maybe we'll see what happens on Monday. I think Costco had great earnings. So they had a great earnings call, and they doing. I think they selling gold bars at Costco. I seen something like literally you can go buy gold bars at Costco. That right there is a little scary to me in and of itself. Like Costco selling gold bars. We're gonna pay attention to that for real. Another thing that I wanted to talk about before I let you guys go is pairs trading. I seen a post on LinkedIn of Liz Ann Saunders. She's a chief something strategist at Schwab. She's on CNBC a lot. I don't know her title at Schwab, but it's big. It's like I don't know if she's the chief market strategist or chief something. She's some kind of strategist, right? And I follow her on LinkedIn, and she put a post up talking about how the Russell, um, how the Russell bottom is possibly bottoming out, basically, as compared to the Nasdaq. So that's just all this is this right here. So I'm gonna pull up the IWM, and then we're gonna look at the IWM. We'll look at as soon as we get it. Pull up the IWM. We'll look at a chart of the IWM, and you can see from its. Let's do a year to date, and then we're gonna measure that up. We're gonna kind of look at that. We'll look at this chart, then we'll go to the Nasdaq, and then look at it. And I want to say she was using the Bloomberg terminal, and she had a chart, so you could see. Here's the IWM, which is a nice head and shoulders. You all see that? This is a big one. Got your shoulder right there, your head, and then your shoulder. You break that neckline and bloop, there you go. So that this would be the IWM, which comparing it just looks like it's really been getting killed, right? So now let's go take a look at the Nasdaq. I'm gonna pull up the triple Q, and then when we look at the triple Qs, it's down, but it's like the Russell is down further. Basically, you see how different this one looks as opposed to the IWM. So a trade that traders make, experienced traders, um, large traders, you can make this trade though on the TastyTrade platform and it not cost too much. Platform I know of that has this, like where you can set these trades up and do these pairs trades like this. You can do this here. Um, I told you guys it's probably the best. This is the best platform out in my opinion. Where you can do pairs trades, you can trade from the curve tab, go on here and put trades on. So right now I'm just 18 bucks down on that trade I put on today, and that is a short put spread in the Qs. We want to see the Nasdaq turn around. We'll see what happens on Monday. With the We got a lot of things going on over the weekend. Of course, we still got the strike. The UAW, the auto workers are striking. I think some more plants. They may have hit some more plants as of today, if I'm not mistaken. And then we also got a government shutdown looming, right? I actually think the shutdown is already priced in. I think that's why the market is down. One thing that we got to be careful of in this day and time is the technology that we have. So 30 years ago, you didn't we didn't have these digital platforms like this where we could hop online and trade. So basically I can express my view, or I can express my whatever my biasness is in the market. I can jump right online and I can put a trade on and express that view. 30 years ago, you had to call a stockbroker over the phone. You had to talk to him. You talk to him, and then he'd say, "Yeah, I get it in." Then he'd call the ticket in, and or he'll send somebody, and they put the trade in. They may take a few minutes, m- maybe even a day. I don't know how fast you would get the trade on, but nowadays it don't even take that. All it takes is the click of a button, bam. And so with technology making the speed and the ease of trading, it increases what's already factored into the market. And we also have some AI platforms that are out now that will balance and rebalance portfolios for people. And it's doing it, and it's reading the data, and it's reading the charts, and it's doing it quickly, right? So with that being said, a lot of risk that we perceive as being risk, the market is already factoring it in, and it's already into the charts. It's already in the price of the underlying. So I'm saying that it's possible that a government shutdown was priced in to the VIX, priced into the S&P 500, which is why it went down like it did. It was pricing in that government shutdown. So if it already priced in the government shutdown, then the market is basically, if the market goes up, let's say we come on next week and then Monday the market is going up, and they have not came to an agreement yet. That means that the market is already pricing in, hey, they're gonna come to an agreement. So it can actually get ahead of what's going on. It's gonna take something, right, to break the market. Like, to not necessarily, why I don't mean crash, but I mean break that mode or that model, because we should have a higher VIX than 17, 18 VIX. With all the perceived risk that's in the world right now, this VIX should be right around 30, pushing 30, and it's not. Even with this sell off, it's not really increasing a whole lot. There isn't a whole lot that's putting fear into the market. So we just have to be on guard for that, and be nimble enough to get in and out of positions when whatever happens, and you'll know it when it happens. And so, hey guys, with that, also look down in the show notes. Some I want to talk about. I have a link to insurance. So if you're somebody watching this video and you don't have any life insurance, whether it be whole life or term life, I got a link down in the notes where you can click on it. I use them. I have term life. I have a term life policy with them. I should get you some insurance so that if something were to happen, your family not struggling, trying to figure out why they grieve and how to bury you. Make sure you got a little policy to take care of that. And also in the notes, I got a link for you to go ahead and sign up with TastyTrade, deposit some money in the account, and let's get trading. With that, guys, hit that like button, hit that subscribe button, share the video. With that, I'm out. Peace.